Hello everyone to the next episode of Converse with Commerce. Amidst the recent coronavirus pandemic, the financial markets of our country were heavily impacted as the Nifty 50 hit its lower circuit on multiple occasions, leading to halting of trades on the Dalal Street. The investors suffered huge losses, and several blue chip companies were available at half their pre-COVID prices. Although the market has shown a bullish trend since then and has recovered partly, the impact of COVID-19 on investments has been huge. We have Mr. Ajay Tyagi, who will shed some light on the topic, impact of COVID-19 on investments in India. Mr. Tyagi, thank you for being with us here today.
Yeah, hi Prateek. Thanks for having me here.
I would like to introduce Mr. Ajay Tyagi, Fund Manager and Executive Vice President of UTI Asset Management Company, the first and one of the largest asset management company in India. Mr. Tyagi has been working with this company for more than 20 years. He manages both offshore funds and onshore mutual funds with assets under management of approximately $2 billion. He is one of the best fund managers of the country according to the Outlook Business and Value Research. He has been awarded as the best fund manager at the CityWire Asia Awards Equity India 2019 and 20.
Good evening, sir. Thank you for gracing us with your presence for this session. So let's start.
Hi Adish. Pleasure to be here with you guys.
Thank you, sir. Sir, during these unprecedented times, what are the changes that companies have undergone in order to tackle the new challenges faced by them?
See, I can talk about UTI in particular. UTI has always had a very strong business continuity plan, which we have been focusing on as part of our risk management measures for the last so many years. In February, when we realized that the COVID threat is real even for a country like India, we started pressing the business continuity plan button for our organization. And much before the lockdown happened in the country, I would say the first week of March, we had started work from home for pretty much half of our organization. And by the time this became a reality for the entire country, we could pretty much effortlessly and seamlessly move all of our employees back to home and work from home. So I think it's the focus on business continuity plan, which helped us embrace work from home. And I would say that our productivity is back to where it was pre-COVID.
That's great, sir. So it is well known investing is a risky decision. For example, one can lose a lot of money, especially when the company he or she is investing in defaults, due to which many people are reluctant to invest. So can you suggest a few ways in which an investor can reduce this risk?
Well, I think Adish, the first and the most important thing here is be sure of where you are investing in. You should not invest on the basis of fads, on the basis of what's going on in the market, on the basis of market whispers and market rumors. You should base your investment on the underlying fundamentals of the business. Invest into businesses which have a very strong balance sheet, have strong cash flow parameters. If all of these boxes are checked and you're able to satisfy yourself that this is indeed a very strong business, I would say that while volatility cannot be controlled, but the risk of a permanent loss of capital can be mitigated and mitigated very well. So the underlying thing is be sure of where you're investing in. Don't go by what's trending in the market.
Okay, sir. So I have observed that you focus on a growth style of investment with emphasis on a long-term perspective, as was stated in your interview with Outlook Business. So in your opinion, would not such a perspective lead to missing out of some short-term trading opportunities, especially in the current scenario, which is very volatile, leading to huge stock price movements?
Well, I think you'll have to link this question to the previous question that you asked. As the saying goes, you can't have your cake and eat it too. If you're wanting to reduce the risk, you cannot also at the same time be speculative and try and capture the short-term volatility. Because capturing the short-term volatility or wanting to capture it is nothing but a very, very risky kind of investing. And I would say it's almost equivalent to speculation. So therefore, when you're driving a car, you can't keep your one foot on the brake and other on the accelerator. So if you're trying to control the risk, you basically have to take your eyeballs off from such kind of short-term speculative market movements and focus only and only on buying for the long term, buying into solid businesses, businesses with strong cash flows, very strong balance sheet, high return on capital, and so on. The two can never go together.
All right, sir. So, as gold prices fluctuate inversely as compared to stock prices, and it did pretty well after the lockdown was imposed on 24th March. Since then, it has grown by almost 200 points, crossing 1800 points, which happened only once in September 2011. So, do you think it is a good time to invest in gold right now?
Well, I would say gold is a very good asset class for in terms of hedging the risk in the overall portfolio. You have to understand one thing: gold as an asset class is not an income generating asset class. If you invest into fixed income like bonds, you get some coupon, which is your returns, which are your income. If you invest into equity, you get some dividends, which is part of your income apart from capital appreciation. Gold on its own is not an income generating asset class, but it acts as a very good hedge. If you go back and see the history of the last 100 years in India, or predominantly outside India, you'll realize that whenever markets turn volatile, whenever markets are choppy, you would see gold acting as a very good hedge, and therefore gold prices starting to move up. And it compensates for the risk in the other asset classes, predominantly equity. I would say with a lot of this volatility playing out itself in the last 3-4 years, getting into gold at this juncture may not be a very sensible exercise, but I can just say that for those who don't have any investment into gold, maybe they can make some incremental investments into gold for the purpose of acting as a good hedge.
All right, sir. So, how has COVID-19 affected the employees of the companies, especially those who are working in the private sector? As many reputed companies like Indigo, Maruti Suzuki, and Uber have laid off their employees.
Adish, here actually, it is a very, very specific issue which has been impacting different companies very differently. So let me just talk about UTI first of all. I think UTI belongs to that select breed of companies which have taken very good care of their employees. In fact, the organization has forget salary cuts or layoffs. In fact, the organization has recruited a set of young people in our sales team to whom we had given offer letters pre-COVID, and we have honored all of that. We have also given increment to our entire organization. So I think different organizations are actually facing this problem and reacting differently. Some of them are using this as an opportunity to stand by their employees, keep them motivated by saying that, look, we're not looking at it from a short-term perspective. We are standing firmly with you, and therefore we're not going to take any of those extreme austere measures like layoffs, cutting off salaries, cutting off bonuses, and so on. Some others, perhaps, who are badly impacted, where profits have been badly impacted, have been pushed to the wall to take these austere measures. So it is fairly case specific, but I feel proud as an employee of UTI that my organization has actually taken very good care of its employees.
That's great, sir. So I've observed that indices like the Sensex and Nifty had been very volatile, as between 23rd February to 23rd March, it went down by nearly 15,000 points, and after 2 days, it went up by almost 5,000 points. So do you suggest people should invest in a volatile market, or they should deposit their money in other fixed return securities?
You see, I think this is linked to one of the earlier questions which you had asked, which was, the long-term investing versus trying to capture the short-term market volatility. I think my suggestion, and a very firm suggestion, is that investors should always be having a long-term horizon for investments. It's only when you zoom out of these short-term volatility, and those volatility can actually really drive you crazy. The minute you zoom out of this short-term volatile behavior of the market and look at the markets from a 3, 5, 7-year perspective, you start making sense of whatever is happening. And the short-term volatility does not basically impact you. All I can say is although the markets have run up from the bottom, but the markets are still below where they were in February before the world basically got into the corona scare. It is still not a bad time to start making investments into equity. And I always suggest that you have a monthly income, you also have a monthly expenditure. The difference of the two should be treated as the monthly savings which ought to be put into uh, equity investing in a very, very disciplined manner so as to grow and generate a very big corpus after 20, 30 years. So that discipline is very important. And therefore, if you're really looking at the big picture over the next 20, 30 years, this short-term volatility should not dissuade you.
All right, sir. So, how has COVID affected public offerings, such as initial public offering and follow-up public offerings? As even your company was going to have its IPO this year, which got postponed.
Sure. First of all, as far as my company is concerned, fingers crossed, we are working towards our initial public offering, and our CEO has been working tirelessly towards getting the IPO very soon. In fact, the good news is that some of the companies which were in a similar situation have also started reviving their IPO plans, with a couple of IPOs already happened in the last 15 days. So we have some precedents of companies IPOing amidst the present situation and the scenario. So hopefully we would see a revival, albeit a slow revival in IPOs and follow-on public offers as well.
So do you think that the public will participate as much as it would have before COVID?
That's a good question. In fact, let me tell you that the retail participation in the markets has increased manifold, as is evident by the data. Retail investors have been participating heavily in the secondary market in the last 3-4 months. And that gives us a signal that as the primary markets also revive, retail participants would try to partake in this primary market revival and primary market activity as well.
So it has been seen that during this time, all companies are shifting to an online roadshow instead of an offline roadshow, and it is becoming the new normal. Can you please share your views on the same?
Adesh, you'll have to repeat the question. You're saying online?
So
online what? Roadshows?
Yes,
what did you say?
Roadshow.
Roadshows for the purpose of IPOs or QIPs. Is that what the question is?
Yes, sir.
Okay. Repeat the question again, please. Or you want me to straight answer it?
No, sir, I'll repeat it.
Okay.
It has been seen that during this time, all companies are shifting to an online roadshow instead of an offline roadshow, and it is becoming the new normal. Can you please share your views on the same?
You see, necessity is the mother of all invention, as they say. So you're having online roadshows right now because the offline world and physical interactions are just not possible. And business still had to go on. Business couldn't have stopped, and therefore people innovated, and the human ingenuity led to these online interactions and online roadshows. My sense is that as we move forward, there could be a hybrid model. So we certainly will not rely only on online. The human interaction and the human touch factor of seeing each other in blood and flesh, in trying to meet each other and draw comfort, would still be there. So as and when the scare around travel and the scare around the infection and the disease comes down, some of the activities will revive again. Whether all of the online interaction will be lost and would we go back to the pre-COVID model looks slightly unlikely, because it seems that some of the interactions can happen on the online mode as well. And that's why I say that it could well be a hybrid model going forward.
So we can expect more and more companies to shift to online roadshows even after the situation improves.
Yes, but like I said, not at the cost of offline completely. Some of the interactions, the critical interactions, will go back to offline as the pandemic recedes, but some of it would be retained. So some online interactions would retain.
Okay, sir. So do you think that COVID-19 is going to leave a permanent scar on the share prices of companies?
Not at all. Not at all. Why should it? You see, the value of a business is the value of all of the cash flows that it derives into the future. All that COVID-19 will do is impact the cash flows for 3 or 4 quarters. So let's say 1 year or slightly more than 1 year. That cannot impact the intrinsic value of a business as much. In fact, like many other crises in the past, prices would only go up in the long run. As businesses grow, businesses become more profitable, businesses expand, and they increase the number of customers and they increase their own profitability. The value of those businesses only goes up. So the difference between this crisis and the previous crisis is that most of the previous crises were on account of certain economic excesses, and they had some financial reason or the economic reason behind them. This one is on account of this is more of a healthcare crisis, which has then led itself into an economic crisis. But we will find a solution to this, and once we do find, we will keep our march ahead. We'll keep marching ahead. So in the long run, nothing changes.
So, but for the smaller companies who aren't able to take care of this pandemic correctly, won't those prices will be affected?
Adish, that's a very good question, but then you'll have to step back a bit and go into the history of corporate India, the history of corporate world. And while we connect the corporate world to the lessons of life in general, I'm just reminded of the Darwinian theory about evolution of life. You know, one of the key takeaways of the Darwinian theory was survival of the fittest. And that's a rule that's applicable in every walk of life, whether it's sports, whether it's music, and of course, if it's the corporate world. The fit will become bigger and better. People who are not fit will actually have problems, and they will become history one day. And the history of the corporate world is littered with many such businesses. So it just makes me again think about the theory of evolution and thinking about the fact that because of one reason or the other, companies which are not good have to actually die a natural death someday. In this particular instance, it's the coronavirus which will become the reason for them falling by the wayside. So I think it's history repeating itself, nothing new again.
Okay, thank you. So since people have so much free time during the lockdown, as most of the people are working and studying from home, so they are saving on traveling time and other places. So do you think it is a good opportunity for people, especially students, who are potential investors of the country, to learn about investing?
Absolutely, yes. Why not? I think one should start learning about investments at a very early age, and therefore I must congratulate and compliment you and your entire team for making an effort towards not only learning about investments yourself, but actually then broadcasting it to a wider audience. Warren Buffett started investing when he was a teenager, by the way, and we all know the success of Warren Buffett. So yes, the earlier the better. Don't do it at the cost of your core studies. I would never advise that. But whatever free time you have, learning lessons about investing is a very, very good idea, I would say.
Thank you so much, sir. We are just doing this to learn more and more about the stock market. Thank you so much. So if a person wants to start learning about investing, how can he start? Like what are the things that he should read about and learn about?
So I think you should pick up a few books written by certain investment stalwarts, some very successful investment managers. We call them investment gurus, by the way. You should start with reading some of their own experiences. How did they develop this entire knowledge about investing? What were their failures? What were their successes? What are their key learnings and their key preachings, therefore? So I think that's the best way to do that. And that's how, by the way, I picked up I would say an interest towards investing while I was in college. So I would advise the same to you and your other friends.
So what is the right amount to begin with in the stock market?
It could be as low as 5,000 rupees. So you don't need a very big amount at your disposal to start investing in. What is important is learning I would say the discipline of investing regularly. Whatever is your savings, putting it to work into equity investing, which is nothing but long-term investing in a very disciplined manner. And do remember, ultimately, what we call as equity investing is nothing but investing into the growth of corporate India, the growth of businesses which represent corporate India. And as corporate India grows, which I have no doubt about, your investments will also grow along with that. So equity investing is nothing but being a part owner of businesses. You have to basically just remember that. If you're bullish on the prospects of UTI as a business, if you become a shareholder of UTI, then you're basically nothing but becoming one of the part owners of UTI. If you are bullish about the prospects of a business like, let's say, Maruti, if you think that this country will have more and more cars over the next 10, 20 years, by becoming an investor of Maruti, you are becoming a part owner of the success of Maruti into this future. So always remember that. And with that discipline, continue investing into equities, which is nothing but investing into the success of corporate India.
Thank you, sir. Sir, so to conclude this session, I would like to request you to give your key message to the students and young investors that they should keep in mind while investing.
Adish, I will repeat what I said previously, which is never forget the discipline of investing. Always remember that you need to carve out some savings which go towards creating a nest egg for your future, to build a huge corpus for your future. That may not be possible for students immediately, but the minute you start earning, you should have that discipline of investing some amount into the great businesses of this country, which can be done by investing into the stock markets or the equity markets, or by the way, by investing into mutual funds, because mutual funds do the same thing. In fact, I would say that young investors should realize that not everybody can devote the kind of time that a professional investor who's managing a mutual fund can do, because we do this day in and day out, and this is the core job that we do. So therefore, either investing directly or preferably through a mutual fund is the I would say the key message that I would want to drive home for all the young investors.
Thank you so much, sir. That was really insightful.
It was my pleasure joining you guys here.
Thank you so much. So that concludes our interaction, and it was an honor being a part of this session with you. It was a great learning experience for all of us.
Thank you, Adesh.
Thank you so much for your precious time and sharing your experience with us, Mr. Tyagi. We as a team cannot express how grateful we are to you for sparing your valuable time for this session in spite of your busy schedule. We got to learn a lot about investing, which will surely help us in future. Your valuable insights helped us to clear many of our queries regarding the market in the present times. We hope to host you soon again. We would also like to thank our teacher Manisha ma'am, who guided us for this interview. Special thanks to everyone who attended this session, and we hope that you got a chance to learn something from it, which was the main reason for hosting this session. Stay tuned for our next episode.